Buongiorno a tutti, I'm Paolo Sironi, your host of the Banker's Bookshelf. The Banker's Bookshelf is a unique opportunity for inspiration about banking and technology. Every month, I invite authors and researchers of the most interesting books and research papers, which are finding a prominent space in the library of curious bankers and fintech entrepreneurs. And today, I have the pleasure to have with me Brett King, a author of fantastic literature about fintech and banking transformation, who is about to release a new book, Branch Today, Gone Tomorrow, which is actually a refresh of a book that he wrote in 2011, but today has new data point and new evidences about what has happened in the last 10, 15 years, which makes it extremely worth reading. Brett, welcome to the Banker's Bookshelf.
Thank you, Paolo. It's good to see you, my friend.
Brett, tell us a little bit about your literature overall to start. Most
Sure.
of the people in the audience know you, but there's always someone new that joins the Banker's Bookshelf. So just give us some hints about how you structure your thought process and where this is available.
So yeah, it's interesting point. I mean, I started writing late in life for business books at least. I wrote a sci-fi novel when I was younger. Um, but and hence the futurist thing, because I'm sort of always trying to sort of ride in that space, in that future space. But my first commercial success book was Bank 2.0, which was I wrote in 2009, published in 2010. And that led to Movin. It led to Breaking Banks as a brand. It led to a bunch of opportunities. But I've continued to write and advise the industry. On top of that, so this I do a lot of speaking. On the futurist platform. Both in terms of sort of generic futurism, what's going to happen with the planet, and on the banking side specifically. But having been an entrepreneur that built a fintech as well, it's given me unique access to the industry because I, worked with these players. And so that's been a great way for me to flesh out the content in terms of the various books. My last banking book was Bank 4.0. I did a book in between since then called The Rise of Techno-Socialism. And I'm, obviously we're working on finalizing Branch Today, Gone Tomorrow for release. And then I'm working on a couple of other books. So this, I think this is my eighth book,
Okay.
Branch Today.
And so, Brett, Branch Today, Gone Tomorrow firstly appeared in 2011.
Right.
What was the key message back then?
So this was 2011, and so what we can see happening now is a reflection of the data and analytics we did back in 2011 as well. And so in 2011, I predicted that we would see a slowdown in branches in the United States and in other countries, a continued slowdown, that there was no future that was going to sort of turn that around, that digital, particularly mobile usage, was just going to lead to more and more real-time engagement propositions. And that was, was also going to supercharge business models and revenue and so forth around that. So that was really the gist of the original book. The one prediction or forecast is a better word that I put in there was that by 2030, the United States would have half their peak branches. And, that forecast seems to be on track.
Which actually present proof your previous predictions, as I made analysis recently to publish my 2024 global outlook for banking and financial markets as the IBM Institute for Business Value. I looked at the number of branch closures in a variety of countries starting from 2012. So basically the year after you released the first edition Branch Today, Gone Tomorrow. Now, if you look at the European market from 2012 up to today, there are 38% less branches in Italy, 32% less in Germany, 23% less in Australia. There's not a part of the world where branches been growing in numbers, in particular India, there's like plus 53% of branches. But these differences are also a reflection of the fact that the banking system were at different levels across jurisdictions. So somewhere you may need some branches, so you really don't need them. So how do we reconcile all of these movements, even with a broader perspective? Because if you start looking at the transformation of branches before 2011, you may already see some striking examples like the UK about the rationalization of the human touch points with clients.
Well, this is a global trend. If you look at the G20 and the Eurozone, the only market that's really seen growth, as you mentioned, is India. In most of the very well-established markets, particularly markets like the UK, Germany, and so forth, Italy has had lower reductions in branches, but there's still some really significant problems with access to financial services in parts of Italy, for example. So it doesn't matter where you look, this decline sort of set in because behavior has changed. And that's really the key issue is that, yeah, while there needs to be some legacy consideration of branches, on a global basis, the introduction of the smartphone has changed people's money and banking behavior. Next year, and this comes out in the book as well, next year, 55% of all retail commerce will be done through mobile wallets, not plastic cards, not cash. And that behavioral shift leads to the fact that you are doing much more immediate engagement on the phone to solve a problem rather than thinking about which bank you're going to go to or where the branch is to go and visit and find a parking spot. That friction is no longer required. And the banks who are leading on digitizing all of those elements of your banking life, they are now the fastest growing financial institutions in the world. So there's a very clear trajectory here in terms of what overall is going to be happening with branches.
I
But
think there is a
there's
combination.
a social consideration, right? Is there, in Italy, sorry to jump on you there, Paolo, but in Italy, in the Calabria region, it's estimated 29% of residents no longer have access to banking because of the closures of branches. And in total across India, we saw a decline of 34% between 2012 and 2021. That's now 4 million Italians have shifted into an unbanked status or debanked status because of branch availability. So this is going to be a question everywhere in the world because you can't rely on commercial organizations to run social infrastructure. And if the economics of branches are no longer working, which is the trend we're seeing, more and more they're relying on digital for revenue for the bank and they're less committed to branches. But that raises the social issue. But corporations aren't really, under the way we've got our market structured, responsible for providing social infrastructure like post offices and so forth, right? We do privatize elements of that, obviously railways and energy and things, but generally speaking, when you're talking about core social infrastructure, it's going to have some level of government involvement.
Yes, in places such as those you mentioned, like southern Italy, there is also the social issue of an aging population. So population tends to be older than average, and typically in the G20 we see an overall aging of the population. And the difficulty of using digital medium for that part of the population is effectively there. That's where post offices might have stepped in to fill the gap. But at the same time, the post offices are becoming extremely digital themselves because they're innovation and the power of technology. So the balance needs to be found between institutions and governments to make sure the transition is done in a very inclusive way. Now, do you believe that the pandemic has effectively leveled up the change in the client's behavior, where we typically saw the Western world lagging behind the digital habits compared to emerging markets like Asia Pacific or Latin America? And if so, do you believe this is permanent structure of client behavior or was just a passing fade?
Yeah, the data shows that obviously during the pandemic, there was significant growth in digital adoption. There's research in the book around the app downloads and the fact that now you have, banks like Revolut, as an example in Europe, a lot more downloads than any of the typical banks in Europe. And so just by looking at the way people's app behavior is changing, it's very clear. And that really was stimulated by the pandemic. Obviously, last year, we saw Revolut grow 12 million customers in a single year. That's more than, what was it, 5% growth, something like that. Very strong growth, despite the fact that Revolut is now a larger retail bank than HSBC in terms of number of customers. When you talk about financial inclusion in this environment, you really have to be talking about digital inclusion to solve that problem of financial inclusion moving forward.
So now thinking about today and the next 15 years, is digital the only channel or the primary channel? Give you an example. Nubank recently reached 100 million customers in Latin America. They are a digital-only bank. Of course, they provide human touch points with the customer services whenever they are needed. And they're now expanding into a field which typically is a bit more branch-oriented, which is the one of SMEs. So very interesting to see how they will capture the market from the digital storefront. On the other side, the branches are there, but they are effectively diminished going forward. So do you foresee the branches will effectively disappear, or is just the power between the digital branch which will reshape the power in favor of digital support whenever it's enabled branches?
Look, it's going to take time. It's not going to happen overnight, but we are going to continue to see contraction in branches, and you're going to see, some organizations that will specialize in branch-based activities that have very strong AUM, right? So you'll see more of the branch spaces left, I think, will be for the top tier customers who have money being managed and so forth, because they can afford the margin in that side of the business can afford to support that real estate. But in every other sort of day-to-day banking element, I think largely, we're going to see branches just continue to decline. You'll have some banks for a while that will specialize in terms of some cool, service elements or something in the branch and try and sort of retain that relevancy. But, there's, when we start having artificial intelligence injected into our technology experience of banking, then really branches won't be able to compete on really any level, not on a cost level, not on an engagement level, because an AI-based engagement is going to be highly personalized, very contextual, and just, a person sitting behind a teller window or a desk in a branch can't compete with that sort of real-time contextuality. So that's the overarching trend. And yeah, if you're in the upper tier of banking and so forth, then there may still be, for large corporations, there may be some human interaction. But again, remember that the business of banking of the future is going to be autonomous or agency-based banking as well. And so that also is not going to require human interaction in the way we think about it today. It's going to be machine-to-machine interaction, if anything.
Yeah, I guess there is to be also a reshuffle of the banking economics, just to say not all of the revenues that the banks could generate in branches were easily transported in digital engagement, which calls for a different way of selling, also creating products.
Right. I do think there is that element, Paolo. I think you're right. I think, part of this is a design element in terms of how do we design these interactions for the same utility, and I think that's what we're seeing particularly with the wallet plays. We now see pay by bank and other the players getting in the Afterpay movement and so forth, the buy now, pay later stuff, that have had success there. We are seeing different modalities contextually, it's a more efficient way to deliver those financial services. And in doing so, the nature of that is we tend to simplify the product down to its core utility. So the concept that you need to see a human because the products are complex, and that's why you need to see a human in a branch. Technologists are taking that as an opportunity to take that complexity out through, better use of algorithms and so forth, right?
Yeah, I agree. But also so is that bankers on one side were happy for people not to come to the branches, that they had to rationalize that it could give them a mobile access, but they may not have thought how mobile access works in terms of engaging the client. That means they have to transform the products, they have to change engagement, they have to redefine
Right, absolutely.
experiences. That hasn't largely happened for most of the institutions. That's where the fintech maybe were a bit more advanced because they started from those first principles to build their technology stack and engagement with client. What I've been seeing lately is some banks are organizing, if you like, calls to invite clients back to the branch, in essence, basically to re-embed them into those traditional conversations. A lot of banks are instead pushing the bankers out to go to the clients and supporting them with technology in a way that they bring the branch by themselves. So there's a transition phase here in the way they are thinking.
No, you're right. There is
forming to the old digital.
Yeah, I think there is there is obviously this period of transition where doing some different things may work for a little bit, to keep those spaces relevant. I don't think it's not binary. It's not going to be, we're turning the tap off at some point, right? It's going to take 20 to 30 years. Again, I'm a futurist, so this is forecasting, right? But I do think that if you look, even in the research just done for Branch Today, Gone Tomorrow, you take the top 20 fintechs, they have 3.8 billion users or customers across the planet. You take the top 20 banks, retail banks, and they have 2.9 billion. Right. So already fintechs serve a larger community, and the fintechs are growing. So they grew 200% in terms of customer growth in the last 5 years. The biggest banks grew 3% in terms of customer growth the last 5 years. And the same for revenue growth. The revenue growth from the fintechs was 45% CAGR, and 15% compound annual growth rate for the top 20 retail banks. So when you think about when you start thinking about who are going to be the biggest players in financial services in 5 or 10 years, you've obviously got to factor in the technology element, how AI is going to impact sort of this personalized experience, and what are the platforms for growing customers on that? So their mobile wallets or fintech apps that are already got some traction, and they're also, those technology players are also the ones most likely to be able to adapt to the AI type era and so forth, rather than traditional players. So it's not that we're going to see fintechs overtaking banking in the future. The fact is, we've already seen that with the mobile wallet inclusion, with the biggest fintechs in the world. You mentioned Nubank, WeBank in China, Revolut in the Eurozone. These are already some of the largest banks in the world. And the suggestion that, the big banks can do that transformation and sort of keep up with that, I think is now the challenge.
So I would not ask my barber if I need an haircut, and I'm not always comfortable in asking a VC where I really have to put my money. But recently, VCs were kind of cold on neobanks. Why do you think this is so, and do you believe they are correct or not?
Well, I mean, it depends on the market, but you now have really, if you didn't get into the early neobanks, back in 2014 as a VC, now, there's a challenge, because we do know that there needs to be a critical mass. You need to be able to get up to that about 20 million customers, somewhere between 20 and 30 million customers, to get to that point where you have that break-even point and the profitability and the scale continue to demonstrate that growth. But how many markets in the world can accommodate new banks that can generate 30 million new customers pretty quickly today? There's not a lot, and that's why you see the neobanks weren't particularly successful in markets like Australia or Malaysia, because they're smaller markets, and UK has been very successful with growing a number of the neos. But there are some limitations to that. And if you didn't get in, a few years ago, now, you have to make much bigger bets to be able to get someone that can catch Revolut or something like that. Having said that, there are newer opportunities emerging in the fintech space, banking and payments adjacent, that certainly there are still real technology advantages to. Certainly in the credit space, we're seeing that my bank, who does 40% of SME lending, so not my bank in China, off Alipay, they do 40% of the SME lending market because of their platform, the wallet platform there, and their NPL ratios are half of the biggest banks in the SME space in China. So, we also know that there are now growing significant advantages in terms of the back office, better credit risk management and all of those sorts of things, better engagement with customers in terms of profiling customers and things. All of those technical advantages still need a lot of infrastructure deployment.
If I can add my perspective here, 2025, 26, 27 will be the years where the neobank will tap into the SME market, which is very interesting, being large, underserved, and that requires attention, is basically 50% of the GDP economy, and it's hard to be managed with the high cost of service. So that's where technology can really
I think you're right.
Now, we've been talking about branchless, or more branchless in a sense, and what about cashless? The two trends definitely intersect in the transformation of banking habits.
Absolutely. In fact, there's a chapter in the book called Functionally Cashless, and it goes through the decline in cash use around the world. And we rank the top 10 countries in terms of cashlessness. So there's Norway, Finland, New Zealand, Hong Kong, Sweden, Denmark, Switzerland, UK, Singapore, and the Netherlands. But we also look at why governments want cashless economies, right? And that is, we think, for tax compliance, obviously, it's very important to reduce money laundering and crime. All of those things, are drivers for this. But if you look at sort of the big standouts, you have some markets, for example, the UK had a 35% decline in the use of cash in the first year of the COVID pandemic. And so now you see why people are using their mobile wallets a lot more, is because you were having to order everything online and so forth during lockdown, so you couldn't use cash, and those behaviors quickly changed. And that's really what we have seen around the world. And, as it becomes more normalized, and you start getting your parents to use mobile wallets and your grandparents and things like that, then over time, you do have that generational shift in the way we think about banking and payments coming.
A very concerning question about the US. Do you believe that checks will be gone before cash, or will remain after?
Checks are so weird, I mean, check usage is obviously declining. The US holds roughly 60% of global volume check processing, which likely means that about 75% of all checks written globally come from the United States today. So that's not a good statistic for for the US. But having said that, regardless, just between 2012 and 2023, we saw a 50% decline in check usage in the United States. So I think we're probably looking at a time to sort of sunset checks and plastic cards around the same time in the late 2020s, early 2030s in the United States.
So the world will be branchless, cashless, and checkless anytime.
And cardless.
Yeah. Cardless as well, yes.
Yeah.
So, Brett, thank you very much for this very interesting conversation. I have read the Branch Today, Gone Tomorrow back then. I'm excited that it will be.
Well, thank you for your contributions to the book too. I appreciate
Give
that.
a chance of sharing some thinking with you and see some material in review. So when is this book available? I believe in pre-order as by the time we release this conversation.
So I think we will see, like October, we should see pre-orders in October, and we're expecting a Christmas release.
So everyone's eyes on Amazon and your author page.
Yeah, and we'll get you guys to tweet it out once the pre-order page comes up. But we appreciate everyone's support. It's going to be it's the first book that I know of that shows we hit peak branch in 2015. So I think that's hopefully going to make some news.
Yes, it is definitely interesting, and all I read so far in preview is worth reading and learning about. So all stay tuned for more at the Banker's Bookshelf. There are more episodes and result discussions which are coming. It is clear by now that the Banker's Bookshelf is an incredible opportunity to make an epistemological journey all together. We get inspired by authors like Brett King of the most interesting books, papers, and publications, which are finding their prominent space in the library of curious bankers and fintech entrepreneurs. With that, we can make better informed business decisions. Arrivederci, and enjoy the Banker's Bookshelf jingle.